Everybody again, good afternoon, and welcome to our second presentation with the wonderful people at GRF here. My name is Cy Alba. I'm a partner with Polaro Mazza in our government contracts practice, and I am broadcasting from an undisclosed location, and so I am not on my camera right now. I was attending the Army conference downtown, the large Association of the U.S. Army conference. So that's where I am, and I'm gonna kind of MC some of this. And I'm here with Jennifer Arce and Paul Calabrese of GRF. So I will let them introduce themselves and kind of take things away as we talk about mastering DCAA audits and cost plus fixed fee contracts, which is a fun topic that I know a lot of people have had problems with. I know a lot of our clients have had problems with, and we look to the folks at GRF to help us there. So take it away.
Thanks, Cy. My name is Jennifer Arce. I'm a principal at GRF. I specialize in outsource accounting, specifically for government contractors performing cost plus work. I have experience in both back office outsourced accounting as well as system implementation, and excited to go through this presentation with everyone.
And my name is Paul Calabrese. I'm also in OAAS within GRF. You could say I'm like a government contract consultant. I used to be a DCAA auditor, still think like an auditor sometimes. I've worked for 3 government contractors, so if you're a government contractor, I understand how you feel in working with all these regulations. And lastly, I've been in public accounting for probably 25 plus years, and just consulting with clients as they deal with DCAA and all other kinds of government contracting issues. So, and before we get started, I just wanted to let you know that if you're still kind of having questions and you're in the middle of this horrible shutdown and that is affecting you, on GRF's website, I do have an article on the government shutdown. What's really nice, it just refers to an OMB FAQ on what impacts contracts and grants during a shutdown. So if you want, just Google, GRF Paul and shutdown, and you'll find it if you still have some questions in that area. But today we are talking all things cost plus fixed fee. So when we talk cost plus fixed fee, but really it's just a short for the cost reimbursable contracts. We're talking about DCAA, Defense Contract Audit Agency, because they're the most prolific. They have their own website and their own set of auditors. Of course, all the agencies have auditors to audit government contracts. And someone's moving the slides way ahead of where I'm at. Hopefully we'll go back. Yeah, right there is good. So, so let's get started. And we're going to focus on managing contracts. And let's just go into when will DCAA perform an audit? And now we'll go to the next slide. There we go. This is one slide from the last presentation. If you didn't and you were not a part of it, you're welcome. They have recordings on the websites and you can go through that. But I just wanted it to be like a starting point, a place of reference. That last time we talked about what types of audits would happen if you have a cost plus fixed fee or a cost reimbursable contract. And you can see the first one is the SF 1408. It's kind of like the gateway. If you never had a CPFF contract and the procurement office knew that you were going to get a contract, they might ask DCA or some other cognizant agency to do it. And there's usually a 14-point checklist. The second one is an incurred cost audit. We will probably focus a little bit more on some other different aspects of managing that audit today. But the annual incurred cost audit, if you didn't know, is to settle your yearly indirect rates because you have cost reimbursable vehicles. The next one is provisional billing rate review. You need to set up a standard rate for the year as you bill. What rate do I use? Do I use last year actuals? No, they want you to kind of project a provisional type billing rate for those. And then voucher reviews, DCA used to say in the past, if you're a large enough contractor, we want to at least look at one of your vouchers at the end of each year, your public vouchers, which have cost plus or cost reimbursable type contracts. They would try to see if, you had using the most current provisional indirect rates, things like that. And the contract closeout is probably something you'll never see, but when you submit a final voucher for a cost reimbursable contract, privately and quietly, DCAA will be in the background and check all the numbers for each of the years. So that gives you a frame of reference, and we'll move to the next slide. There we go. So, I could have done a flow chart, but, everybody, continues to ask the question, I don't really want the auditors to show up, but why don't the auditors show up? And the answer is very, very simple. If it's not cost reimbursable, 2 and 3 below, if I were to do a flow chart, would be not applicable. But also part of this process is that they want to know, are you a prime or a sub? And if you're a subcontract, probably no audit. And Jen might have something to say along those lines.
Yeah, the one caveat that we see quite a bit on the non-DoD side is this existence of unpopulated joint ventures that have gone after cost plus work, and having 2 or more companies basically being a subcontractor to the joint venture, and then the joint venture obtaining the work. By virtue of being the subcontractor to the JV, we have seen that those instances, you are essentially the prime to the JV, along with the JV, and you become the auditee of the government. This was happening quite a bit in the past, and then we've seen some of this really slow down because the agencies realized that instead of auditing the joint venture, they now had to add more resources to go audit the members of the joint venture that are actually doing the work. So it was an increased cost on the government side. So that would be the one caveat on, are you a subcontractor? If you are a subcontractor to the joint venture directly, then you would be potentially open to that audit.
Okay. So again, if you have fixed price, time and material, you could have a GSA or an OTA kind of contract vehicles, you know that this will not be involved. This is only FAR-based contracts that are cost reimbursable, and then it starts to trigger all this process. Obviously with DCAA, for DCAA to get involved, it has to be a defense contract. But with any other agency, if you're a prime contractor or you have cost reimbursable contracts, then you will find some kind of audit. The last thing you should know is that there really are no monetary thresholds. If you're not familiar, there are no thresholds like the cost accounting standards for this stuff. It just simply, do you have the contract or not? Interestingly, DCAA does do assist audits, and an assist audit basically is like your Lockheed Martin, very large, and you have a cost reimbursable subcontractor. And so sometimes they'll ask the offices, for whatever reason, if they feel there's enough, the contract's large enough and worth going after, to do that. So it's possible you could be all subcontracts or have some subcontracts that are cost reimbursable, and the government might audit you. So that is, just so you know, a possibility. But we'll talk later about the portal that DCAA requires primes to submit. You wouldn't be able to do that. So this is kind of a little interesting nuance there. Okay, next slide. So what we wanted to talk about, and we're going to be talking about your annual incurred cost audit, is there a way to reduce the possibility of some of those audits? How can the incurred cost audit, if you hadn't heard and you played the recording from last session, part 1, last month, you would see there's a lot of different testing that goes on. It's a real drain of resources. I don't know what you've experienced, Jen, and that there's a drain of resources when they do an incurred cost audit. You could talk a little bit from your experience.
Yeah, we have contractors that are both very small, up to full and open size-wise, and the level of effort tends to be the same during the cost plus audits, primarily because when they come into audit, they are really auditing your entire process across the company. So I like to give an example of if they're coming in and looking at labor, since labor tends to be one of the riskiest areas for them, it's not as easy as just turning over a timesheet. They're really looking at what was the offer letter. From the offer letter, have there been any increases? Show us the process to obtain the increases and the sign-offs. Then match that back into the timesheet system. From the timesheet system, was it submitted on time, approvals, etc. Then take it to the payroll report, and from the payroll report to the W-2. So when we look at sampling and they're taking, 50 to hundreds of samples on each of these areas, it's not as simple as just pulling a timesheet. So when you are a small company, having the resources available to be able to turn around the documentation tends to be tough. And then even as a larger company, it's still taking away from resources that are working on everyday work. So trying to, and we'll get into it a little bit more towards the end of it, is having all your documentation at the time of either the ICS submission or as you are making changes throughout the year, so that when the audit does come up, it is easier for you to go ahead and pull that documentation.
Great. Next slide. That's right. We have a quick poll. Now, this is a very simple poll, but for those who are, getting CPE, it's very important that you make sure you're answering yes. Very good. All right, now we'll go to the next slide. Thank you. So, in reducing the likelihood of DCAA audits, there may be many people here that are listening that right now may be all fixed price, time and material, and management and the management team has said, hey, it's our strategy just to stay away, because now you're going through some of this stuff, and certainly you can report back to your team. Others will go after maybe just one, keeping the volume. Part of the strategy here, obviously, is if you only have one small cost reimbursable contract, it could impact whether you're actually audited or not, which I'll explain in a minute. But then you might say, well, why would I want a CPFF contract? But sometimes they're research oriented. So there's a whole new world of AI, and you may have an expertise in cybersecurity and AI. And this may be a golden opportunity because the government does a lot of cutting edge things because they have a lot of cutting edge issues. And so that's why a lot of people start to get into this. Yeah, they don't like the vehicles and so forth, but there's a need for it. But to reduce the likelihood of audit, there is something in what we call this ICE template. Now, ICE stands for Incurred Cost Electronic. It's the invention of DCAA, and you can go to www.dca.mil and you'll find it. It's a little bit hard through the process once you get there because they put a little thing, a little hyperlink under it, and you have to mess with it until and you can download it. And the ICE model has many tabs. It has 30 tabs. And in one of those tabs is a template, a schedule called H continued. And I know that sounds very niche and so forth, but the point is it provides something called the government's participation in the allocation base. And what that gobbledygook means is that it will list in the G&A base, as an example, how much is CPFF, how much is the fixed and all the other fixed T&M, commercial, and so forth. So if yours is like the base is only 5% for cost reimbursable under G&A, then they may not audit. So they are going to look at that, look at audit risk and determine, is it to the risk of the federal government that something might not be right? So, and you may not know, or maybe you do know, but there were executive orders. We don't know if the executive orders in reducing the size of government impacts DCAA. I did work for DCAA, and I was not considered an essential service, believe it or not. So at least that was many, many years ago. I don't know if it's changed or not. So, and they did close about 40 different what they call sub offices recently, and that impacted 160 auditors. So I don't know if they were displaced, reorganized, or let go. So what I'm trying to say is there's only so many auditors that can do these reviews. We'll talk about them using independent public accounting firms later, but you can see there's a lot of things here. They've got a very important job, and there's a lot of risk, and so they're going to pick which contractors and which contracts to audit. Another thing down there is submitting what we would call an adequate submission. And it's very important because there's a portal. Again, the DCAA has what they call contractor submission portal, and you submit this ICE submission if you have at least one cost reimbursable contract, and it's due within 6 months after the year end. So basically, you have to submit it in there, but then they want to see, is it adequate? And if it's adequate, it starts to pass through the test process of whether they're going to actually audit you for various reasons. And one of them we'll talk about in a minute is keeping your unallowable costs down, and whether you have system issues or not, or whether they put you in something called the low risk sampling pool. 1 or 2 may be pulled out of it, but if you're in the low risk sampling pool, you may not be audited. Now, be clear, this is DCAA's and the course and the contractor submission portal are DCAA's invention. If you go, I know Jen works with different agencies, they don't have this. And is it right, Jen, that they may be auditing every year, your experience?
Yeah, they typically audit every year. And one of the things I wanted to say, as you are submitting, obviously wanting to see the schedule H continued or H1, which gives us the calculation of base from a risk perspective. But if you are a contractor that just has a very small percentage of cost plus work, you might end up getting a desk audit out of your cognizant audit agency. And the one thing that I can say is ensuring that with this desk audit, they'll still ask for some of the main policies like we talked about before, your accounting policies and procedures, any SOPs around how you treat certain costs. And when you get that desk audit and they ask for the samples, ensuring that the samples provided have all documentation matching back to your policies and procedures, because if you give them something that is not complete, you might bypass your chance of a desk audit, and they will then expand the scope of that audit. So just ensuring that your policies and procedures are up to date and that any audit samples provided do adequately reflect them is a big one for us.
Okay, and so again, from the DCAA side, you submit it in the portal. The portal is good because it gives you a reference number. And one of our clients, they said, well, gee, we didn't see you submit for the prior year. And we gave them the reference number and they were able to track it down. So it is kind of a nice feature. And it also helps with communication that we'll talk about later because it's consistent. It does ask those 3 kinds of questions. One, is it DOD? Because that's what they're dealing with. But then, is it cost reimbursable? Are you a prime? And if you're not one of those things, it'll boot you out, I assume. So it is a good thing. I'm glad that they set it up. And of course, after the adequacy review, if they don't audit you, then within a short period of time, hopefully, sometimes it takes a while, they give you your rate letter, the settled rates, which is the rates you proposed or claimed, which is really a good thing if you don't have to be audited. And I'm sure most of you don't want to, use up your resources. There is something I would share with you that if you've ever seen the downloaded ICE model, it has macros in it. So it has moving things. So like you may have a fringe that's fringe may be a part of overhead and G&A. It may be a separate rate. It may be this, that, the other thing. You may have other kinds of service centers like head count or facility or occupancy. And it goes through it. You may have a number of overheads on-site, off-site, various overheads, and a G&A. You may have a sub-handling pool. But it has macros in it, and it's not so perfect at times. A lot of people will take that macro or that version and kind of enhance it. Sometimes by doing that, they may, have to make sure and test that it doesn't have errors in it. So you are allowed to use your own model. You don't have to use the ICE model. I use it because DCAA is familiar with it. It's usually going to be the newer, less experienced auditors that will go through the adequacy process. So I want them to see their own model, even though it has its little issues with macros, so that they're familiar with it. Please understand, if you didn't, government auditors have a psychology. I was once an auditor. I understand their psychology. I understand the way they think. Sometimes I think farther ahead and quicker than they do, because it's the same approach. The approaches haven't changed. Maybe the technology behind it has, but a lot of the stuff is still the same. And so we want to make sure that we're giving them something that they understand, that they're familiar with. And even as a suggestion, if the group here wants maybe in the future to have a webinar on just how to prepare this mega spreadsheet, Jen and I, and I'm sure Cy would be happy to work with you if you want to make a suggestion like that. I just thought I'd throw it out. Another thing that you should consider is, what if I just have fixed price and time material? I don't need to do the schedule, right? Right, you're right. You do not need to do it. But if you have the ICE template, because it's fairly standard and a lot of agencies accept and use it, schedule or tabs I through H is really creating those indirect rates. And it's got a bunch of stuff beyond it to the right. That's a lot of administrative stuff, and you certainly want to fill up. But I recommend, even if you're fixed price and time and material or using some software that puts it together, you may just want to run it through one time and see if your rates are working the way the government would expect them to work. And no matter what, I don't care how small you might be, you certainly should know the basis. Someone comes up with a rate a couple years ago and they keep using it. It needs to be refreshed annually on that. So that's something to think about when you're dealing with indirect rates.
And I want to jump in on
ahead,
that one really quick. It is a good exercise for those, especially that are not in the cost plus world, because sometimes when you do submit either T&M or fixed price proposals, the government will come back and ask for your basis of estimate. And being able to build up to those rates, if the government does provide it, and ensuring that what you're using is factual to how you are currently running or how you anticipate to be running is really important. Because I haven't seen that on the fixed price side.
Okay, cool. Just some other points real quick. Obviously, the obvious is you want to, of course, not have unallowable expenses from year to year. And so keeping those question costs down and doing a thorough review, having strong controls on your system is very important. And I know Jen will be speaking to that later, right, Jen? On the types of controls over unallawables. And, cost type contracts, obviously the compliance is increased compliance, but with increased compliance comes increased cost. So there's a higher cost for compliance. However, all of that cost is allowable. It's usually under your G&A because it benefits everything. And what you're going to see as we get towards the end, when Jen gets more into her area of the softwares, is the software has a lot of the controls built in, which will help you keep your unallowable costs down. Keeping your unallowable costs down is DCAA is going to look at prior years whether to audit you in the current year. If you have high unallowable costs in a prior year, they're going to audit you again no matter what. And also, if you have system controls, they're going to audit you again. And they have a permanent file. Sometimes they don't look at it, but if they do, they're going to see recurring problems. They're going to want to review that. And before I move on, just make sure, Jen, if you have any final comments along those lines, if you want to.
Yeah, so I typically have most of my experience within the NIH sector. So when those auditors come into us, one of the first things they ask us for is a prior year ICS or ICE model, or what was submitted in previous years. And along with that unallowable expenses, they're really looking for variances, high variance changes in all of your G&A and overhead pools, fringe pools. So they're looking for swings. So while you might not have huge variances in one area, but maybe you do in another, that could be another audit flag for them to want to go in and sample more from, and maybe avoid doing a desk audit and doing more of a full-blown audit.
And, DCA will look at all the transactions. Say even if you had a small part of cost, but then of course you have fixed price, let's say, or T&M or commercial or something else, or even GSA, they'll test throughout the whole system. They still got to do tests without the whole system. But some of the things they really fine tune look at, and again, this is a part of the process of them determining whether to, do a full-scale audit of you or not, which drains resources, is they're very concerned when they see you through adjusting entries, moving money, removing expenses, especially like from fixed or T&M to cost reimbursable. To them, that would be a red flag. To them, I can tell you that may even be a concern for fraud. So I'm just telling you in their mind how they begin to think. So those are things we want to be careful about. All right, let's move along. The next slide. There we go. So let's go to the next slide. All right. So part of reducing those audit disallowances is beginning to familiarize yourself. And if you weren't familiar, in the Federal Acquisition Regulation, or FAR, subpart 31.2, are the cost principles that relate and that provide the foundation for allowability and allocability and reasonableness. And they go over those three very much in depth. Like reasonableness is what a prudent person does in the conduct of competitive business. In other words, you have a competitive business, you're not going to have marble floors and fancy wood, walnut wood walls and fancy paintings, and trying to do that on the government dollar. You can't as a government contractor, because the profit line is, so slim. So, but they look for those kinds of things. Are you doing things reasonable? Is it allowable? And there are about 52 cost principles. Some have been removed and are reserved, and you can look at those and so forth. And allocability, which is just the concept of allocating costs and bases and numerators and denominators, and they go through that, and then they go through these cost principles. And so that's that. If you learn it, if you understand it, you can use it for research. DCA also came out with something called the Selected Area Cost Guidebook, and you can see it at its website. And so those are other things. Don't you want to know, especially if you have an issue, how does DCA think about it? As I shared the last time, one of the biggest areas of a large money for a new CPFF contractor is bonus. It is an area they will immediately look at. Why? You'll say, well, I've always had a bonus plan. They'll say, okay, but did you evaluate that particular individual? Have you invested in your HR system so there's a performance review and a basis for, if they do well, how they get a bonus? And it's something you could put in hundreds of thousands of dollars, even small firms, and they'll take it back out of that rate. So if you don't satisfy that information. Do you want to say something, Jen?
Yeah, I wanted to just kind of touch on the bonus policies. So ensuring that you have a bonus policy for anything from like a spot bonus to a referral bonus, typically those you would find in your employee manuals, to win bonuses. So win bonuses for any of the BD team, and having a clearly defined plan on what constitutes the win bonus and the amounts is a really, really big audit piece. And then management bonuses, and what the management bonuses are for, because a lot of times the management bonuses tend to be unallowable. So having written documentation around each of those bonus types, and who can participate in which ones, who are excluded from certain types of bonuses. Typically, if you're eligible for one bonus like a win bonus, you're not eligible for things like spot bonuses. and vice versa, and then adhering to the plans and having all of the bonus sign-offs done prior to the bonuses being issued is really big from an audit standpoint.
Yes, definitely. One of the things that are going on right now, if you're not familiar, and I know that Size Firm is talking about it because I've seen a lot of their updates, is on the revolutionary FAR overhaul. And so there's a lot going on in that world as well. And just for information, because I'm really concerned about, well, what happened in FAR 31.2, because those are the cost principles. And I looked there and it has a thing where it shows what's been underlying to be removed. And it mainly, the only thing that I saw that really had very little, if any, impact on 31.2 except definitions. They got rid of a number of definitions because they felt it was in the cost accounting standards. My only complaint with that is that many smaller firms may never be cast covered, and therefore they probably wouldn't know to go to the cost accounting standards. And today, I understand they want to shrink things, and I agree, but some things may be kind of important to remain just for that purpose alone. Our slides are automatically removing. If they could go back, keep going, one more. There you go, thank you. There's also another thing, if you think about it, right now that's really happening. There are probably government contractors out there right now that are listening, and you're probably saying, gee, I'm in a government shutdown, and yeah, I've looked at some of the rules of what happens during a shutdown, and the big question is, can I pay my personnel even though they're not able to work because maybe they're on site, on government site, the place is closed, locked down, and they really can't do anything away. Maybe they can, maybe they can't. If they can, and it doesn't matter, but maybe they're doing something, you know, where they really literally have to be there. And then the question is, can I pay them and can it be recovered? And I don't know if Cy wants to get involved in this. I don't want to put them on the spot, but I believe they can be paid and the money can be recovered through an overhead. And the reason for that, it's similar to like construction. In a construction situation, it has nothing to do with your shutdown. You're going and you're on base and you're building a building, and they say, well, you're modifying or renovating a building. Well, we can't do anything. We forgot that the plumbing needs to be put in first or fixed. And so all these people are on standby. You can't let your crew just go. And there's nothing for them to do, but you're going to pay them because you don't want to lose them. And so I bet there have been delay claims and special things for this, but I was just curious if Cy's on, if he wanted to comment, if he's seen things like that, what he thinks.
Yeah, in fact, that's been coming up more and more this year in this shutdown than I've ever seen. Because what's odd about this particular shutdown is that there's so many contracting officers that have been riffed or left or quit or whatever, that they're not issuing stop work orders like they usually would. They would usually issue a bunch of stop work orders as they're gearing up. And here I've seen a number of clients where that didn't occur. And so now you're in the exact position that you're talking about, where your contract actually requires you to continue working, which would require you to continue paying your people, which we think gives you an even better argument now than in other shutdowns where people were on the ball and they were following the various other rules and procurement regulations and contracting rules, and now where they're not. Now it's a little bit of a wrinkle if your contract requires you to keep working and you can technically do your work, but you can't do certain things because you have to get supervised, you have to get let in a building. There, I think, Paul, to your point, you would probably have a claim of either certain delay issues if you can't do it, or breach of the implied duty to cooperate and not hinder performance, which is read into every contract, private or government. It's just an implied duty that everyone to a contract has. And so if the government isn't cooperating with your performance because they're not there, could that form a basis? Now, what's interesting is that runs sort of headlong into the Sovereign Acts doctrine, which is that if the government takes an action as the sovereign, it can't be held responsible because it's not a contracting action. It's not specific to your contract. But I think the fact that they didn't issue a stop work and they didn't follow the rules, and therefore you are required to continue working, sort of militates against the government being able to use sovereign acts. But frankly, I was just looking at this. There is no case that I'm aware of that this situation has ever arisen. So like so many things that have occurred in the past few months, this is kind of a unique situation as well, and certainly will be subject to litigation, I'm sure.
Great. Jen, have you experienced your clients have talked about these issues? I just not trying to put you on the spot, but.
Yeah, you know, it's really tough on clients to, especially when you get into the small to mid-size, to even be able to afford to continue to pay their employees while they're on shutdown or stop work orders. You know, I would say a majority is it's either PTO or leave without pay, and then obviously if some will extend PTO. You know, it really is company by company on what they can do and what they can afford to do.
Okay. And actually, a point on that has really nothing to do with this, but it's a very important side note because it's come up also, is you need to remember that if you don't put your people, like let your people go, or, you know, furlough is actually, I think my labor and employment folks would tell you, it's not really a thing. You're either just letting people go and telling them you're going to hire them back. But if you don't tell them to stop working and they do work and you owe them pay, that is not debt that can be easily like dischargeable. And also the owners of the business and even managers can be held legally responsible under state law for payment of wages. And that is something that you'll be personally liable for, even if you have like an LLC or a corporation or various corporate forms that would otherwise protect you. The debt to employees for wages is not something that's protectable. So you cannot let that ride. And it's critically important that no matter how much it sort of hurts you ethically or whatever, that you lay off your folks or further whatever, tell them not to go to work, or you could be personally responsible for those wages.
And to kind of piggyback on that one side, this shutdown happened in the middle of the week. So what we are seeing is that anyone who is FSLA exempt, you do owe them the week's worth of wages, is what we've been seeing and hearing from a standpoint of they were exempt. They started their, you know, the week, now it's shut down. If they are on this stop work order, that week from a salary testing perspective, being owed. I don't know if you want to comment on that too.
Yeah, I believe that's the case. I'd have to talk to my labor and employment folks, but I think that, and SCA has also other weird scenarios too. So if you're in any of those kinds of situations, you know, happy to talk it through. I can put you in touch with some of my labor and employment folks, and they can really drill down on those issues.
Yep.
This is a great discussion, and it's very relevant to what's going on. The only final comment I would make is part of going back to this DCAA selected area cost guidebook is if you know you're having some issues with the government, it's a good idea just to see how DCAA thinks. It doesn't mean you have to agree with them, but if you want to get an insight, well, gee, you know, we're going to give them a lot of bonuses, and now we're in the CPFF world, you know, you may want to look and see what DCAA has to say on some of those things. So, all right, let's go on to the importance of communication. And the next slide. So one of the things that are very important is just we need to have clear and ongoing continuous communication with the auditors. One of the things that happened a while back, we had a client And I call it the dutiful CFO. You know, whenever DCAA tells you something, you know, and this was years before the contractor submission portal, you know, and they all pretty much just had subcontracts, excuse me. They never had any primes in their cost reimbursable. And we asked DCAA about it, and DCAA, yeah, said submit it. But the interesting thing is, from what I've heard, is that DCAA never came in, of course, did any audits. And so it's this kind of thing when I say a dutiful CFO, if they're told something, they'll do it. But then they're probably scratching their head saying, you know, why am I not hearing? And, you know, this isn't just, if they do the full ICE submission template, it's not just the rate computation, which isn't so bad. It's all this other lots of information that has to be done. And by the way, if you didn't know, this is a requirement in the FAR. There's a clause of 52.216-7, and DCAA must have been them many, many years ago. They said, look, we're going to write this into the regulation. So this behemoth ICE schedule template, whether you use it or not, technically the government, it's in the FAR, and you have to use something like it. So it's like you really can't get away from it. But years ago, DCAA wrote an internal memo called the Rules of Engagement, and they wanted to make sure from the auditor's standpoint, doing things properly as they should, that audit issues are identified early on, potential problems can be dealt with immediately, audit processes, results, conclusions better understood. In other words, you want to make sure that DCAA, during an incurred cost audit, doesn't get the wrong idea and run with it. And 10, 20 years ago, that wasn't an uncommon thing. That's why they're supposed to have an entrance conference with you on incurred cost audit that basically says the object of the audit, the time frame, due dates, those kinds of, what are their expectations as well as due dates. And of course, an exit conference. But the issue is this ongoing dialogue with them, you know, and hopefully they're bringing up issues. If they keep asking you and focusing on one area, pretend it was idle, you know, personnel, you know, that should give you a red flag. Hey, I'd like to talk to you about it, because obviously you keep asking from different angles, and I've given you the documentation you've requested, but what might be your concern? Because I think that's something you want to address early on. Any other comments from you?
Yeah,
Jen?
as we get into when we talk about small to the mid-sized businesses, in that entrance conference, if you are a small back office or you have people who are wearing a lot of hats, it's okay to go ahead and ask the auditors to extend their timeline for all of the items that are due. So setting the expectation up front, saying like, hey, we are a small business, we still have to operate, you know, or we're mid-sized, we're a lean back office, we still have to operate. This is on top of everything else, and just asking for extensions is better than getting to the end when everything is due and telling them like, we're not going to be able to get you this stuff. We've gone through this with lots of clients asking for extended timelines on getting samples in, or can we upload samples as we go, you know, as we're working on them. And 99% of the time, the auditors are happier and more willing to accept that and go with that than get to everything is due tomorrow, you've got nothing done, and then you pass that due date, and then the auditors sit, right? Because they also have an audit timeline where they're planning and waiting for items to come in so that they can work on them. So just having that open communication with the auditors from the get-go typically goes a long way.
Great. I think there's a polling question coming up. Very complicated one. Again, it's so important for CPE. And trust me, I consider CPE very important. So we'll go through that process. Please, if you're getting CPE, click that. Okay, let's move on to, all right, the role of IPAs. Let's move. Next slide. Next slide. This is one of the last areas I'll be briefly talking about, and then Jen's going to take it over on controls and so forth. Independent public accountants are used and hired by DCAA to supplement and avoid long backlogs that they've had a history in getting these incurred cost audits done. And the USAID, when USAID was in its heyday, they would use a lot more, if not all, and other agencies may or may not use them, but they do audits pretty well. My experience is that they are like very professional. This has changed over the years, but they've improved. There's no drama or any type of things that you might see with some of the DCA folks. And one time we had a client, I identify with them, so I say we, but they had about 10,000 in unsupported costs. They couldn't find it, but given that, you know, they were auditing millions of dollars, they just passed on it. They didn't even put the 10,000 in the audit report. I know if DCA did it, not to pick on them, they would have put the 10,000 in there with all the schedules. But so they are a little bit different. But one thing you have to understand about these IPAs, they are on a contract, and therefore they have to finish the audit, and that's why they go through scheduling with you. So if they're asking you for a certain due date, you really have to meet. You may be a little bit later, but overall you've got to meet those due dates, because at a certain point they're going to finish, kind of want to fold this thing up and give it to the government. And what I've seen was some that either had some real serious issues, they really didn't have the docs or whatever, and they just unsupported or questioned the cost, and that was it, and they were done. So you don't want to get into that kind of situation. The only other thing that I would share with you from my experience is for the small government contractors, they sometimes, some of these IPAs will have these questionnaires, and one of them was a risk assessment, and it was 14 pages and 50 items, and that was kind of a lot. And I said, do we really have to do this? And they said, well, put in non-applicable. Well, there were probably a lot of non-applicables for a small business. And so I'm going to turn it over to Jen if she has any issues, and she's going to move into the other top 5 considerations.
Yep, we can go ahead and move forward on the slide. So when we go into these audits, there's some of the top things that we've put together from a systems perspective and policies and procedures. So when these auditors come in, they, outside of just the samples that they're going to obtain from your financial system, there's typically other questionnaires. There's IT questionnaires. They want to know all the systems that touch your financial system, who has access to all of these systems, you know, what are your policies and procedures. So being able to be ready for the entrance and answering all of these questionnaires and then having documentation really sets you up for ease of use on an audit. So when they come in, one of the first things that they do ask is from your financial system, who has what access. And depending on the software that you are using, you can produce reports, you can filter by roles and provide printouts. But the biggest piece is making sure that whoever has certain roles, so if we say system admin roles, and we provide the auditors with this listing of, here's our system administrators, those system administrators now become open to talking to the auditors about what do you do for the company and what are you doing within the system. So if we have someone who has system admin access but has no idea what it means to maintain the system, that is a huge red flag for the auditors and could broaden your scope and could also broaden some of the IT scope questionnaires and samples from a system, because now we're looking at, we have someone who has full and complete control to a financial system, has no idea what they're doing within the system. Is there fraud happening? So being able to have role-based permissions in a system and periodically checking your system to see, people move around all the time within organizations. So if someone had access to certain projects, maybe they were the PM to a certain project, now they moved on to the other one. Have you turned off their access to the old project? I like to say do a quarterly review of who has access within your system and print it, because the auditors will say, do you review your system? And you can say, yes, I do. We review it quarterly. Okay, show me that you review it quarterly. So just saying that you're doing it does not demonstrate to the auditors that kind of that warm and fuzzy feeling. So being able to print it out, sign off on it, email it, however you guys want to do it, but document the fact that you are reviewing it. Everyone who does have access is appropriate, and that if access needs to be removed, go ahead and remove it. I think that is one of the biggest pieces, especially on the entry, because that sets up their risk assessment on how much, outside of some of the other cost plus items. But if you have poor system controls, your audit is just going to broaden, because they're going to want to make sure that costs are in the right place, that there is somewhat of a segregation of duties, not one person is controlling all aspects of your financial process. The other is the timesheet and labor controls. A lot of the government contracting software solutions, even things like T-Sheets with QuickBooks Time, have the ability to restrict who can charge what. Time tends to be the biggest cost in government contractor systems, so it is the highest risk for the government. And what they want to do is make sure that your people are charging their time accordingly. So when they come in, being able to properly show that people have access to only what they should, and maybe if you're providing something like overhead access for onboarding, we can show that we're giving them only a snippet in time for a certain amount of hours, and that this overhead code is not accessible to them on a full-time basis is really important. The other is having the approvals and adjustments to timesheets well documented. A lot of the big name software solutions have the audit trail on the timesheet itself, so it can be printed out and provided. But along with that is what is your process for approvals and adjustments. And so if your policy or your procedure says that in order to initiate an adjustment, an email has to be sent to a project manager and CFO, and both have to approve, making sure that that email has gone out, it has been approved, and that, I like to tell my clients, print that and put it away in an ICS audit folder, so that when they do come, if that timesheet is sampled, we can provide documentation that the policy or the procedure has been followed. Going back 5 years, Paul can speak more to the DCAA side, but on the commercial side, these audits are 4, 5, 6 years in arrears. And so trying to go back and search for an email for the timesheet adjustments 5 years later is so hard to do. So anything that touches typically your policies and procedures and adjustments, especially, print them, store them, put them on the network, whether it's, I like to keep ICE folders of anything that could potentially be picked up on an incurred cost audit, so that we just have it readily available. We also have the ability in some of the softwares to go ahead and attach these documents into people profiles, if it's a AP correction within the AP correction itself. So then it stores within the system, and when we go to pull it, it's already there readily available for us. So just knowing what your software provides and from an attachment standpoint is really big. The next one, and I know we're running out of time, so we're going to go through these really quickly, but the workflow and approval processes. So again, depending on the software that you're in, being able to have these workflows and approval processes and take it out of email is really a big improvement. From an ICE audit perspective, we're able to provide documentation, the source documents, to the auditors with the approval trail attached within the document itself. It takes the need out of having email attachments and what have you. Depending on the software, we can have them timesheets, expense reports, PTO requests, your AP invoices, your AR invoices, any kind of purchasing. So whether you're using the purchase requisitions or the purchase orders, being able to have the workflow and customizable workflow gives the auditors more confidence in the system and that you're following your policies and procedures. The other piece of this is the automatic notifications. So being able to set your system up, from a workflow perspective of, I will tell you on some of my clients, I get an email every day at 3 o'clock that says, hey, you have AP items waiting for approval. So I know that if I haven't logged in yet for the day, the system is telling me there's stuff waiting for me from a notification approval standpoint, whether it's timesheets, it's AP, it's AR, it is sending me a reminder that it's there and waiting for review and approval. And then the audit retention and document retention and audit readiness. So a lot of, even QuickBooks now has the ability to upload documentation to transactions. I highly suggest that everything that relates to cost plus work within the company and even your AP process, AR process, gets uploaded into your financial system. When you give your auditors your GL export, they're going to pick source document numbers, and that's where you're going to get your sampling pool from. So being able to just go into the system and say, okay, I'm looking for voucher 10,002 and have the printout of where it was coded, what period it was coded to, who the vendor is, the approval trail is already there, and then the AP invoice is already attached, is a lot faster to get you through that audit than trying to search back through folders and find the correct invoice. It also, though, will ask for the payment piece to it as well. So being able to have your system set up for maybe remittance address, remittance advices that can automatically be stored in the system for us to print if needed, or ACH notifications, keep ACH documents kept in the system as well, just from an audit standpoint. Next one. I think the last big one, because I know we're running out of time. Oh, there's a polling question. Are you still listening? Last one, we promise, just to get through the CPE requirements. Perfect, 98%. And we can move on. So the last slide that we have in the system considerations is your expense policy enforcements. So being able to set up, you know, a lot of the softwares now have configurable expense rules from amounts, categories, are receipts required? Do we need a wizard? Is your per diem automatically uploaded so that when people do travel, the government does not have to worry that you're exceeding per diem? That's always a big one in audit. So making sure that if you need to be using that, you are using that. Does your system flag for policy violations? So if you have a policy that you can't stay anywhere over per diem, but you did, and now you've put it in, is the system flagging it and marking it to the correct, you know, unallowable travel, and having it flow through the system properly is really big. If we can show the auditors that that is being used and enforced, typically it'll help reduce the scale from a sampling perspective of costs, especially expense and travel costs through the system. And I think with that, we have 2 minutes to spare. Not sure, Paul, do you have anything else that you would like to add on to that?
Not at all.
Not on my end. I think we went through a lot of good information on here. So, you know, if anyone has any questions, yeah, like we just answered, yeah, we'll have the materials available. And then this also go up on our YouTube channel and stuff like that as well. So it'll be generally available and for everyone to reference. And if there's questions that come up or if you need any support, you know, feel free to reach out. We appreciate it. And hopefully we'll see you guys again soon.
Yes, for part 3.
Yes,
Exactly.
thank you so much.
Thank you.